Hi, this is Steve from Fresh Agenda. I'm doing something we haven't done before. I'm doing a solo effort this time. Joanne is a long, long way away from me. She's way down in Melbourne. I'm up on idyllic Burleigh Heads on the Gold Coast. But Joe's got a much harder job, even though my background sounds fine. She is trying to work out how to grow the Australian dairy industry with a bunch of other people. So I've got the easy option today. So this week, I'm going to step through a few things that we're watching affecting the fundamentals, then have a quick look at GDT event number 314, and then a fairly sobering chart of the week for the Australian industry. So some things in the background that we're watching in our Global Directions platform. Starting on the demand side, we're obviously watching a lot more than this, but here's some big three things that we're watching that are moving. I guess the time it takes for China's demand to revive as they come out or as they linger in lockdowns, and the impact on their dairy demand across different categories. We don't get a lot of visibility on how that tracks month to month. But here's a little thing we monitor: is the mobility of people in major cities, the top 18 cities, and that's been going flat for some weeks. Activity is not picking up, people are not moving around. That's going to impact convenience and food service demand, which is still languishing below the prior year. Aligned with that is something that's probably a bigger issue, and I'm showing there the curve of imports through to the middle of this year based on the latest data up to June. July's will come out shortly. But that's showing that enormous peak, as we all know. I think what's taking shape, or we think what's taking shape at the moment, is that we're going to see that flatten out. The seasonal peak, the tariff window is far less important. And our base position is shifting to one where we're going to see that flatter, and consider what it means for New Zealand's production priorities and product mix. I'll come on to that. The other thing obviously mentioned there is slowing US demand. That's impacting cheese for one, particularly cheddar, but also starting to impact butter. Less so a vital issue for international markets, but the cheese aspect is important, and whether that impacts milk use as well in the US. On the supply side, some big things here. We've seen quite a bit of moving around of those US milk margins. This is a dynamic daily take we have on this based on futures prices and how class 3, class 4 and feed prices project out. That's got a bit better in the last few days, but still tracking seriously downhill as we go through into next season, early next season. So just keeping an eye on that, what that means for milk availability and product mix. The EU is also throwing up some surprises. The latest data we've seen for June showed an increase in skim and butter output, which is kind of defying logic. But the year-on-year change in milk is not very large, and obviously the stream returns are favouring that, despite the higher costs and difficulties in producing milk powder. You can see there the June numbers are coming through, looking like there's very minimal decline in milk year to year. But this gets a bit deceptive here. When you see last year in that bottom chart, particularly France and Germany, they had very low comparatives, and the year-on-year numbers can be misleading. The actual change in milk volume, even though that we may see the black line exceed the prior year because of the depth of decline last year, that may be one outcome. Don't forget, France is going through horrendously dry conditions. That's going to impact feed availability the further we go out. So still very much a lottery in that regard. The other thing that's a lottery, it's a New Zealand season. We understand pasture growth indicators are well below the prior year, as much as a quarter below the 10-year average, and have worsened in recent months. And the big rain events are due to sweep across country in the next week. Couple that with the likely shift in mix if we are seeing a much lower demand for whole milk powder from their major market. A shift in mix within available capacities towards butter and skim and cheese is in the mix. So that's something that we're modelling to assess its impact on global balances. So GDT number 314, as we had the lead up, the main price action we saw in the run up to this event. You can see there we've seen a little improvement in cheese prices prior to the event. Skim milk powder, however, in both major markets where trading is relevant to GDT results in particular, has been heading down. In terms of whole milk products, though, whole milk powder has also been declining. We saw a GDT pulse event last week, which took prices lower than where futures were before this event. So a bit more optimism in the futures market after that pulse result. The other thing to look at is that despite softer demand, trajectory for CME cheese is positive. So seeing that that's going to improve values as we go forward, that was a good read for cheese, and in this result, that also responded. So the results, cheese was the most positive outcome with that background. We saw small falls in whole milk powder, 4 to 5% across contracts. Pretty mild given the savage rumours kicking around in the past few days, which I'll talk about later. But that's a mild result. The big news this time, however, was the carnage for fat values, in particular AMF. Butter tracked sideways, but AMF tanked big time. As a result, that's where it leaves us. So it leaves us with GDT, the GDT premium going forward, significantly higher than other supplier forward prices. An interesting outcome, and that may give some bullishness to other markets. As well as New Zealand cheddar holding up quite well, as we've seen a small increase in US prices and the EU right out of the market on that spot price read we've had from that region. And the other thing to look at out of this result that typically drove a differential in outcomes for the powders is the demand result. I always look at this in these results because I think it's quite important to understand what's actually happened. Milk powder's looking very similar there, but the result was quite different. And if we look at the two powders, skim actually achieved above average, and that was largely due to the fact that we saw a higher starting point compared to average, or certainly the last few events, but also the results, the demand sustained a bit longer at a higher level. So that generated an almost flat result across the whole category. We saw a bit of differential in the result because we saw New Zealand product essentially go sideways, but it was the European product, a smaller tonnage obviously, but that fell over $100 a tonne, and that impacted the result. Whole milk powder started sad and continued that way, and hence we had a 4% fall. So not a surprise. When we look at where buying occurred, there's a lot of detail I could go into here, but I think the main takeaways is the positive demand signal coming out of Southeast Asia, stepping in as we see these values fall, and we've got both whole milk and skim milk powder tracking well above prior years. More coming to GDT because of the, I guess, the convenience of the platform, but there's a bit more demand up there than was expected, I guess. A couple of other important things to call out. The 10% fall in AMF has dragged that discount down to out wider to $1,300 a tonne, which is staggering. The change or the advantage for New Zealand butter over shipments to the EU market has stabilised. It's not changed for the last couple of weeks. So while prices in both regions are moving, the thing that's not plotted here though is the apparent advantage now that AMF might hold for the North American market, particularly with where we see butter fat values up there, and that will be an interesting one to watch with this recent tanking. So there'll be a bit of interest in that market, and that may have an impact on US pricing going forward. I've cleverly repeated this chart because I think it's interesting to say while that AMF value has declined and that discount is much larger, that's brought the difference between whole milk and the synthetic value based on the US non-fat option a lot closer. the closest we've seen for a while, probably since March. As you can see, those lines almost touched in Q1, but we've come back to more sensible differential. That's all theoretical, because really whole milk powder is all about the balance between New Zealand's output and the weak Chinese demand, which is certainly keeping a lid on prices and pushing it down, as you've seen. So it's nice to look at this. It doesn't really mean a lot in terms of decision making. Last thing I want to look at here is, in terms of this result, is the sad news for New Zealand milk prices, even though they're going to be fairly spectacular again over the full season. But that is a steep decline, and we were looking at somewhere near $11 in spot value just a few weeks ago from this event. The latest out of this result, the full year estimate for FY23, based on the events we've had, the forward sales from the events we've had, and then futures prices beyond that, gives us about $8.87 per kilo milk solids today, with a reasonably consistent currency value, which happens to be very close to where the futures are. So the futures are still a good read of what we think that full year estimate is, based on a lot of assumptions. Chart of the week, and this is not particularly good news. The big rumour circulating, which I'm sure everyone is across or has different versions of, is the likely blockade or banning of Australian dairy imports into China. Not absolutely confirmed, but that's the talk that's being picked up, and the sources from within that market that various people we've spoken to have been informed by, is that there is definitely a customs word out that Australian product is going to be stopped, or likely to be stopped, again subject to confirmation. But this is what's at stake, and it is a very large slice of Australian export. This is by far Australia's biggest market for dairy products, built up to $1.7 billion in our currency in 2019. The slowdown there is, you can see that the strong march that occurred from 2015 as a free trade agreement benefited Australian exporters. That got clipped when a difficult arrangement or difficult situation between our governments over a whole raft of issues, which I don't really want to go into here, but that, whilst there was a lot of talk about damage to dairy's exports, they largely continued. And in particular, we saw growth in skim milk powder, which went up 50% in tonnage. We've seen a big growth in the milk and cream trade, but it's also an important cheese market as well. The big victim in that, the chart there doesn't go back far enough, but the big victim was the infant formula market, and really that product has now shifted out of the industry, and we've got a much smaller body of exports that is improving a little year on year up to June, but still a big hole in what was there in the past. So trade will be rerouted. I mean, these products will find other markets. There will be a dislocation, of course, in the short term, but it's likely that Australian product will find a home. Not likely there'd be permanent damage, because we are dealing with products that are reasonably short in supply. The milk and cream exports, though, that is going to push that back into this domestic market most likely, and where things are quite tight. So there may be some silver lining there. I'm not sure too many would see it that way. Okay, all right. Well, that's all from me. I promise that we'll have Joanne back next time, and it'll be a much more entertaining and rewarding experience. So please don't miss the opportunity of tuning in. Thanks for your attendance. Bye.